Welcome to the deep dive. Okay, let's jump right in today. We're looking at something pretty fascinating happening in the stock market, really just over the last couple of days. That's August 13th and 14th, 2025.
Yeah, it's been noticeable.
Definitely.
Yeah.
We've seen this incredible appetite, almost, for smaller companies. Some groups actually saw their biggest inflows, like, all year. It's like a switch flipped. So the big question is, what's behind this sudden surge? And what are these small cap power thrust signals people are talking about?
Well, it's all tied together. And the main driver, it seems pretty clear. Investor expectations about interest rate cuts, like happening soon.
Okay.
That July CPI print came in better than expected, right? The inflation number.
Right, the CPI.
And that seems to have, well, virtually guaranteed a rate cut in September. And that seems to have ignited this monster small cap rally we're seeing.
Interesting.
Yeah, we've talked before about how small caps tend to do well when the Fed cuts rates historically.
We have.
And the data now suggests that rotation is definitely underway. So today, yeah, let's dig into some new data, some signal studies that really shine a light on this.
Okay, perfect. So we've got the small cap surge, rate cut expectations. Let's peel back the layers here. Our mission today is to unpack the data, understand these signals suggesting, maybe more upside for small caps, and figure out if this could be like the early innings of that rally everyone's been waiting for. We'll try to get to the what and the why of this shift.
Sounds good.
So you mentioned this really kicked off just, Tuesday and Wednesday. What specifically changed in those 2 days to cause this?
The big thing was the odds. The odds of a September Fed rate cut just shot up, basically to 100%.
100%. Wow.
Yeah. And that's hugely meaningful for, the small cap group. They've kind of been left behind for a while.
They really have.
And look at the flows. If you slice the data for Tuesday and Wednesday by market cap, get this. 91% of the inflows went into companies below $50 billion market cap.
91%. That's huge.
It's massive. It's not random. The big money, institutional investors, they know who benefits when rates come down. It's usually these smaller, maybe undercapitalized firms.
Right, the ones more sensitive to borrowing costs. That makes sense. So the money's flowing there because they expect cuts.
Exactly.
Okay, so connecting that to history. You mentioned we've looked at this before. What generally happens when the Fed cuts rates, but, under conditions like these?
Yeah, so our previous research looked at just that, and the pattern is pretty striking. When the Fed cuts rates, and critically, the economy isn't in a recession and doesn't fall into one 12 months later, small caps tend to soar. It's quite consistent.
Typically.
Historically, the Russell 2000 index, that's a common small cap benchmark, it jumps about 17.1% on average in the 12 months after those kinds of rate cuts.
17.1%.
Okay.
That's a strong historical precedent then.
It really is.
Yeah.
The data shows it's pretty robust.
All right, so that's the rate cut angle, the history. But you also mentioned the technical action just this week was remarkable, like a violent up move.
Yeah, exactly. It wasn't just the rate cuts. It was what actually happened on the charts. A move this big, this fast. It's rare.
So how big are we talking? Give us the number.
Okay, so the S&P Small Cap 600 index, it jumped an incredible 5.42% in just 2 trading days.
5.4% in 2 days.
Yeah. It was 3.23% on Tuesday and then another 2.12% gain on Wednesday. That kind of sharp, strong move up, that's what we call a power thrust.
Okay, let's break that down. A single-day gain, like that Tuesday one, 3.2%. How rare is that for the S&P Small Cap 600? Put that in perspective.
Good question. So a single-day gain of 3.2% or more. Looking back to 1995, it's only happened 130 times.
130 times since 1995. Okay, so not common at all.
Not at all. Think about it. Roughly 250 trading days a year. That's like less than 5 times a year on average. It's genuinely rare.
And what happens afterwards, historically?
Well, the follow-through is usually pretty strong. Since 95, on average, 3 months after a day like that, small caps are up 4.8%.
Okay.
6 months later, they jump 12%. And then 12 months later, they surge, on average, 26.8%.
26.8% a year later. Wow.
And if you just look at the period after 2009, so post-financial crisis, those numbers are even bigger.
Bigger out.
3 months later, jumps of 11.1%. 6 months later, rips of 20.7%. And 12 months out, a surge of 42.6%.
22%, okay.
Yeah. So just based on that one-day signal, the study suggests, you probably don't want to be underweight small caps heading into 2026.
That's already pretty compelling. But you mentioned the 2-day move was 5.4%. Does looking at that 2-day thrust give us an even stronger signal.
It does. And yeah, this is where it gets really, really interesting. So that 5.41% jump over Tuesday and Wednesday.
Right.
A 2-day climb of 5.4% or more.
Yeah.
That's even rarer. It's only happened 66 times since 1995.
66 times, okay, half as often as the single-day signal.
Exactly. And the gains that tend to follow, they're, well, breathtaking.
Okay, lay 'em on me.
Since 1995, after a 2-day thrust like that, 6 months later, small caps jump 14.2% on average.
14% in 6 months.
12 months later, they climb 36%. And get this, 24 months, so 2 years later, they average 51.4% gains.
50% over 2 years. That's
huge. It is. And again, just like the other study, if you look only from 2009 onwards, those gains are only larger.
Wow. Okay, those are some really, really strong historical signals. Are there any major caveats? Times this didn't work out, or is it usually pretty reliable?
That's a fair question. Look, no signal is ever 100%, right? Markets can always throw curveballs.
Yep.
But the consistency here, especially when you combine it with the economic story, the expected rate cuts, no immediate recession expected, it makes it particularly compelling. You know, the times it maybe didn't play out as strongly often involve some big unforeseen shock or maybe a policy reversal from the Fed. But in more typical cycles, these signals have been pretty darn good indicators for small cap strength. And the logic holds, rates come down.
It helps those smaller companies more.
Right. Think about it. Borrowing gets cheaper. That frees up cash for them to grow, invest, hire. It improves the bottom line. That's why investors get excited and start looking beyond, the usual suspects.
Okay, so bringing it all together, all this data, the rate cuts, these power thrust signals.
Yeah.
What does this all mean for you listening right now? What's the takeaway?
I think the message is pretty clear. It's probably time to start broadening out your stock list. Look beyond the biggest names.
Mm-hmm.
As rates likely come down, it should really unlock pressure on these smaller firms. They've been penalized for years, maybe by higher debt costs or just being seen as riskier.
Right.
A lot of them are growth focused. They need financing to expand. Maybe their balance sheets aren't as rock solid as the mega caps. So cheaper money is a big deal for them.
So potential for better returns outside the giants.
Exactly. There's a whole world of potential alpha, market-beating returns outside of just the magnificent 7 that have dominated for so long.
Yeah.
With moves like we saw this week, we really expect new leadership to emerge. And our data, it's already showing specific individual names getting bought, getting accumulated day after day.
Interesting. And you mentioned within that rally, certain subgroups were particularly strong.
Yeah, we saw that. Inside the overall small cap move, a few specific subgroups really drove the train initially, made those first big gains happen.
Okay, so there it is. We've got the expected rate cuts lining up with these really powerful, historically significant technical signals, these power thrusts. It strongly suggests, maybe a major shift underway, favoring small caps.
Seems that way.
And for you, our listener, this isn't just about charts and stats. It's maybe recognizing that the market tide could be turning towards a whole different area.
Yeah.
Opens up potential new opportunities, maybe things you weren't looking at before. It's definitely an exciting moment to be paying attention.
Absolutely. And maybe just a final thought to leave you with. Given everything we've discussed, the history, the rate policy connection, these big moves, what could that mean for how you think about diversification? About where new leadership might come from in your own portfolio beyond those familiar big names?
Good question.
Yeah, it's definitely worth pondering, the implications of maybe broadening out that stock list, thinking about where that next wave of market leadership might really come from.